be ripe and ready. So I always take time to repeat what you've taught us and keep learning, keep reading books also. Yeah, and then that's the way to go. That's the way to go. And also to treat it like a business.
Wonderful,
That's one thing
wonderful,
I've also
wonderful,
learned. Like to treat it like
wonderful.
it's a business. Because if you don't show up with day tweet, don't expect to get anything from it, you see.
That's
So
very
yeah, you
true.
have to show up there every day. So yeah, that's part of the discipline also.
That's a powerful point, man. That's a powerful point. That's a
Yeah.
powerful point. So I hope everyone is well, and I think we can actually start now. Whoever will join late, they'll just join us later. So my main focus is still on Boom 500. Not to say that other pairs are not moving; they are moving, yes, but due to experience and exposure, I have an ability to know the pair that is going to give us money for that particular moment, or let's say the pair that is going to move, for example, in a swing that is going to give us a swing move like this one. This is a swing move that we're actually expecting right now from Boom 500. That's why my emphasis is still there on Boom 500 to say, guys, this Boom 500 is still going to sell and it's still selling and it's going to sell all the way to where we're expecting, and from there we're expecting long-term buys. So the most important thing is for you to understand why did we why did we even come up with that bias to say it's selling, and why are we saying it's going to start buying from here? Why are we saying it's going to buy, and or why are we saying all of that? So that's the most important thing. If you know the why, for example, this trade here, remember when when you're looking at order flow, this is a lower high, this is a lower high, right? So long this lower high here is not broken, so long this lower high is not broken, right? It means this market is still bearish. Same here, so long this was not broken, the market was still bearish. When it's broken like this, these are just confirmation that we're still going down. So this is how I want you to look at it. When you look at it with this perspective that I'm about to give you, I tell you that most of the trades you're going to win, because this is how even the institutions think. So this is how they think now. When they have a high there and a low here, right? And they break the law and they break the swing law, right? This this is the initial move, or the initial uh, target that they were targeting to come from the high and break the low, right? Then this one now, it's a pullback. This pullback, it's also another objective of them as well. This is also another objective. So objective number one was to come and break and break the law here, because it's bearish order flow. Come and break the law. After we've broken the law, we have to pull back. After we've broken the law, we have to pull back. So what you need to understand now is to understand what is the current objective right now of the institutions. The current objective is it to push price down and break the law, or it's to pull back, or is to pull back into any significant zone before proceeding. So you need to have that ability, the ability of knowing what's the current objective, what's the current objective of the market makers. For example, in this case, when we are here after we've broken the law, this was the objective here, to break the law, right? First objective. Second objective, after we've broken the law, we have to pull back. So the second objective after every breaking the law, so it means after breaking the law like this, we don't expect you to keep on selling, because remember, after breaking a swing low like this, they will pull back. They will pull back, even if sometimes it might not be that far. Sometimes they will pull back. The pullback is most definitely going to happen. So same thing here, after a pullback has happened. So meaning after this first objective has been met, it means you're no longer looking at sales. After this first objective has been met, which is to break the law, it has been met. You're no longer focusing on sales. It means you're now expecting a pullback. You're expecting this pullback to happen. So now when the pullback is happening and has happened, you also need to know how far that pullback is going to go to. You use Fibonacci retracement. You can also use your significant zones and everything. So once it has done the pullback and it's finished the pullback, that's the second objective that has been met. So meaning objective number 2 has been met. What's the next objective after a pullback? The next objective after a pullback is to push price. Push price and break the law. Push price and break the law. We broke the law. Objective met. After we break the law, what's the next objective? Pull back. We have to pull back. We pulled back into where? Into a significant zone. Remember, so long we don't break this lower high, we are still going down. So here, we had a zone here. This is a supply here, supply zone. If you check that supply, it was tapped almost first time, second time, third time. So that if ever we're talking in a trend line language, that is what we call a third touch when it comes to trend lines. That is what we call a third touch when it comes to trend lines. And the third touch it's usually a powerful touch because there's confirmation already that we have respected that zone and we are respecting that zone. So this level here, supply zone, tapped, dropped, tapped, dropped, tapped, dropped. So this coming back into the supply is simply just to confuse people who are not aware of how structure operates. This is still a bearish order flow. Lower high here, lower high here. This is a lower high. Even if it had come all the way here and failed to break, it was still going to be a lower high. So this is our lower high. Once we now have a lower high, market must, remember the pullback has finished. How do we know that the pullback has ended? Number one, it has tapped into the extreme supply and also 78.6, which are mostly our final zones when it comes to pullbacks. When it comes to pullbacks, 78.6 and 88%, those are the final levels that we expect the market to pull back onto. When you see it going back all the way to 100%, that's the final one. But mostly when it comes to below 100%, we're looking at 78.6 and 88%. Those are the regions that you'll be looking at. 61.8 is also good. It's a golden zone. It's a golden zone. You all know that. So we have our lower high here. Tapped exactly into 78.6, which is a good zone. So someone now with understanding now of the market could have actually sold from there and also from there. Those are entry points that you could have simply gotten from there, 78.6, exactly on 78.6, because it was still within the vicinity of this supply zone, right? So I also have a trend line now, a trend line that I just plotted, touch. This move outside, it was simply faking out, but remember, trend lines are simply a part of our confluence. Someone right now could have said, trend line is broken, so I'm buying. That's bullshit, because you're forgetting, you're not looking at other confluences like this. This is a supply. So if ever it breaks the trend line, it doesn't break the supply. So there's no breakout there. The real breakout was supposed to break the supply as well. Then maybe do this. That was going to be something. Let's say if ever someone really wanted to buy, it had to break trend line, supply, as well as break this lower high. It had to do this, then come back. There you could have bought nicely going up. But all those factors, they were not met. So I don't expect someone who is part of us, someone who has been following us, someone who has been listening to us to be buying anywhere from there. Even now, I don't expect anyone to be buying, because according to the current, where I expect you to start buying is on this region. On this zone. Why this zone? This is a supply zone. This is a demand zone, I mean. And also according to the higher time frame analysis that we did, this was actually a higher low. A higher low because this broke internal structure. So this was our higher high. The higher high here, according to this movement that was happening here, the higher high is this zone, is this one. Higher high, higher low. So we don't expect that higher low to be broken up until we reach our final zone at the top that we marked according to the daily. The final point of interest, or the final zone, major zone that we're expecting to be reached on the daily. So long it hasn't been reached, it means we are still going to push up. So already we have a bias. We have a bias that is covering a lot of ground in terms of boom 500. So here, bearish order flow. I'm expecting a move all the way down, right? So once you have done your analysis, daily analysis, 4-hour analysis, 4-hour, that's where you must get the major structure, main structure of what is happening. You must always make sure that you go to 4-hour. That's where you can actually see the main structure. Daily is good. You can daily can give you the overall bias, the overall picture, what is happening and what will happen. The daily can do that. Even the weekly can do that. 4-hour is good for showing you the structure, clear structure of what is currently happening now, which can actually make you to be profitable now. So now, as you can see, we have tapped into the supply and we are dropping. So let's say someone is not in already. What we just need to do now is to scale down to a lower time frame. Lower time frame, we are simply talking about your 1 hour, your 30 minutes, your 15 minutes. Going down there, we simply want an entry confirmation or an entry criteria. Once those entry criteria are met, it means one can actually enter that cell. Going down to 1 hour, let's see if ever we can get anything. Right, this is the 1 hour time frame. I like what I'm seeing. I like what I see. On 1 hour, I like what I see. Why? Because remember what we always tell you, that after we break internal structure, which is internal structure, I'm referring to this internal structure like this. After we break like that, we always expect a pullback before a continuation. That one, those that are in the class, you are aware of this. And also, so there are two types of entries. If ever you have been listening to me for quite a while, you realize that there are two types of entries that we have. We have the breakout, the normal entries, which are simply the breakout. For example, here, this breakout, it was simply a sell entry. But now we have the other type of entries, which are this change of character pullback. That's another type of entry as well that we have on the market. So this first, we could have sold obviously into this demand here, because around this demand, it can actually boom back into where is it booming back to? It's booming back into this supply here. This supply, it hasn't been retested. This supply. So we have a supply, we have a trend line, we have a supply, we have a trend line, we have another supply. Supply here, major supply, minor supply, and a trend line. So it will be having a lot of quite a number of confluences. So that is where someone who didn't enter their sell here, they can also enter upon the pullback into this supply here. That 1 hour supply, if ever you scale down to lower time frames, you can actually get a smaller stop loss. That would be your entry there, your stop loss above there. Your target, remember, all the way down. This is actually a beautiful opportunity. So even yesterday, someone who was smart enough to look at structure, if you look at structure clearly, this is a zone, touch, faked out, it simply came back to test that zone. So even yesterday, you could have also sold here as well. You could have also sold here based on this zone here, the stop loss above there. So now, here as well, you could have sold here upon the breakout, the stop loss above there. Now we are now expecting another entry type as well there upon the pullback into the supply. Once we pull back into the supply, we sell and we hold all the way to the downside. This is a beautiful opportunity that can actually make you good money if ever you really listen carefully to what I'm telling you and you follow exactly the instructions that I'm giving you. There is no need for you to come out of it. For example, once it pulls back and it begins to drop. Someone when it's here, they say they now want to come out. No, there's no need for you to come out, because after we've analyzed like this, you don't need to just jump out of trades for no reason. You don't need to do that, because opportunities, they don't come every time. They come every time, but not every day. They come every time, but not every day. They come every time, but not every day. There are days whereby you actually need to wait for the opportunity to present itself. So if ever you don't take advantage of the opportunity once it has presented itself, it means at the end of the day, you're going to, you're the type of people that are going to take low probability trades, because you missed the high probability trades that you're supposed to take. You didn't take. So out of impatience and out of FOMO, which is the fear of missing out, you actually find yourself taking low probability trade entries. Yet you could have simply followed instructions and held that trade that you're supposed to hold, or up until it reached the target. Remember, the same way we enter trades is the same way you must also come out of trades. If we enter trades because of confirmations, we must also come out of trades because of confirmations. So we don't come out of a trade without any confluence or any confirmations confirming that we must come out. You don't come out. You don't come out so long you don't have any confirmations or any confluences telling you to come out. You don't. You do not come out. You do not come out. You don't come out of a trade if you don't have any reason to come out of that particular trade. So this is the supply here on 30 minutes. That's going to be our entry there. That's going to be our entry. That's going to be our entry. That's going to be our entry. This other supply here, that's actually tabbed onto. We tested. So these ones, that's where our entry is now. So if ever you didn't enter, this was a simple basic entry. Simple entry that you would have entered simply by the breakout. This was the first entry. Breakout here, breakout of the trend line, you would have entered stop loss above here. Because remember, you're not only entering because of the breakout of the trend line, you have an analysis that is starting from the daily. You have reasons, so many other confluences already. So many other confluences. So can one place buys a pullback? That is a very good question. That is a very good question. That is a very good question. And to answer that, I will be very, very real and very authentic with you. Right. Where is the flow? Where is the wave? Where is the momentum going? The momentum is going down, right? The momentum is going down. That's point number one. Point number two, is your account size compatible? Is it stable enough to take counter trades? Counter trades, I'm referring to trades that oppose momentum. Trades that oppose momentum, like the buy that you are talking about right now. It will be opposing momentum because right now, after this change of character here, as well as the overall order flow, that is bearish order flow, this momentum is strong to the downside. So if ever your account balance can hold those counter moves, for example, personally, I can take the buy. I can take the buy. That is, if ever I want to, I can take the buy. I actually do that quite a lot. But I don't give, if ever I'm giving signals, I don't give this buy. I don't give that buy, and I'll never give that buy because of so many reasons. People, especially signal, people who subscribe to signals, most of them, they have small accounts. The majority of them, they have small accounts. And for me to give a counter signal that is opposing the flow of the market, it's something that is that might not be necessary for me. But if ever your account can manage to take counter trades, you can simply take the buy nicely all the way up. All you just need to do is to make sure that your stop loss is below the zone there. Your target is there. Once you get there, you can actually continue selling. But it's all about you understanding your account balance. Can your account stand counter trades? Can it hold? Can it manage that? If it can manage that, good. So this, guys, is a beautiful opportunity. I'll keep on talking about this. I've been talking about BOM 500 for quite a number of days now. And the reason why I'm doing that and not talking about anything else is so that when you don't make money out of the opportunity, I want you to see who is the problem. I want you to see who is the real problem. If ever you don't make money out of this BOM 500, I want you to see that you yourself, you are the problem now. The problem is no longer even the knowledge. The problem is no longer even the market. The problem is now you. Because after we have explained and broken down the market to you, like what we have been doing so far, we've showed you the entry points, showed you the exit points. After we've done all this, then you find yourself not making money. Something is wrong, definitely, with you. So this is a beautiful opportunity. Personally, when such opportunities are presenting themselves like this, I don't sleep up until this market comes to my zone and I take that trade. I can actually sleep after taking the trade and putting my stop loss above the zone or just above me to be safe. But I can sleep for example, I'll just do the calculation. Obviously, this 30-minute time frame. So it can take, if ever it's going to go up, it can take me, let's say 1 or 2 hours, depending on how the booms are going to happen. 1 or 2 hours, if not 3 hours. If it does that, obviously it means I'm going to sleep for 2 hours or 3 hours, waiting for that opportunity. Once I've done that, once I've seen and I wake up, the market is on my zone, I will enter. I don't need to waste much time because the analysis I've done already. Your most job here is basically on analyzing. That's where the majority of your effort you must put it on analyzing, not on placing trades. Placing trades, that's the last job that you must do. That's the last thing that you must think of. Taking trades is the last thing that you must think of. Your most important job here is to analyze. Analyze, know what is happening, know what is going on. Once you have that understanding of what is going on, once you have the understanding of what is happening on the market, it means you can now take trades. Most of you, the problem that you have is you want to take trades without having invested much time in analyzing, which is where most of you, after you're now in drawdown, that's where you now want to start analyzing. That is just a road to failure. That is just the path to failure. If you want to fail, do that. Trade before you analyze. If you want to find yourself losing money unnecessarily, trade before you analyze. You'll find yourself in drawdown. After you're in drawdown, that's where you want to start analyzing. That is not a smart way. That is not a smart way of trading. That is not a smart way of trading. So here, even if let's say start booming there, one can even place their what do you call this? You can even place your, what do you call this? Right, this your
limit order.
Your Fibonacci, exactly like this, around 78.6. That's where the pullback would be. 78.6. You enter there. Especially if it taps it like that, that would be wonderful. You can enter the stop loss above here. Then the other thing, remember market structure. When you are aware of market structure right now, so it means this is our high. Where is our low? Our low is here. This is our, let's say we want to look at external structure according to this time frame, right? This will be our high, this will be our low. So meaning, so long this high is not broken, we are still valid to go down. We are still valid to go down. So meaning, I'm just giving you a brief example of the other opportunities whereby it can even come and break through all the way to test here. The other moments like those ones. So even if it comes all the way like this, doesn't break here, it's still a trade that is valid, still a trade that is valid. That's why I emphasize that when you're putting your stop loss, you need to put your stop loss at a reasonable level, that if ever you're taking out, for example, here, let's say your account is too small. If your account is too small, okay, you can put it here, just above here, right? It's fine. If it goes our way, it's fine. But if ever your account is big, you can actually put your stop loss above here. Putting it above here, you're just protecting yourself from unnecessary stop loss hunts that might happen. That might happen. Not that will happen, but that might happen. If ever they do happen, you're just protecting yourself. That's the advantage now of having a big account. That's the advantage of having a big account. That's why I always emphasize that treat forex trading like a business. Make sure that your business is growing. Don't enjoy trading a small account every time. Don't even celebrate that. Don't even celebrate. So here, if ever we refine according to 15-minute, you see that this is the level and our stop loss is actually shorter. Our stop loss is actually shorter like that. So that will be the zone according to 15 minutes. So that's the advantage of a big account. A big account, someone with a big account, you're at a higher advantage, especially when it comes to stop losses, and also when it comes to profit as well. Because someone with a small account, when they make whatever they make, you can actually make times 10 or times 20 or times 100 of what they made. on the same opportunity, same setup, and same everything, simply because you have a bigger account. That's the advantage of having a big account. Make sure that your account size and your account balance is growing. Make sure it is growing. If ever you are still maintaining the same account balance each and every single week, each and every single month, you're not growing at the end of the day. Your business is not growing. You're simply stagnant. You're simply stagnant. You're not really moving. You're simply stagnant. You're in one area. So make sure that your account balance is growing. Your equity is growing, because that is it's an advantage to you. It's an advantage to you. It's an advantage on your side. It's an advantage on your side. So here I just showed you the two types of entries that we have. Simple basic entry that you would have entered based on a trend line here. This trend line, you would have entered the sell from there, obviously targeting this demand here. This demand was going to be your target for those initial sells. Then the second one are after the change of character. Change of character, we expect the pullback and a continuation. After this has happened, the market can now go all the way. So those are the two types of entries that you just need to be aware of. So someone who is smart will know that this was an opportunity. This is going to be an opportunity. And this one as well is also an opportunity, just in case you want to take the counter. But remember, I said counter trades, make sure that your account balance can sustain those counter trades. If your account balance is small, focus on where the order flow, focus on where the momentum and the order flow is going. Focus on those type of trades. If ever your account balance is small, focus on where the momentum and where the wind or where the wave is going. Focus on those types of kind of trades, and not this counter trades. So that is it for our Boom 500. That is what is currently happening on Boom 500. Anyone with a question? Anyone with a question? Anyone with a question based on what I've just spoken? Anyone with a question?
Sir.
Yes.
Hello. So according to the analysis, so I can place a sell limit, then I'm going to sleep.
Yes, you can do that.
Oh, okay. Okay.
You can do that. You can actually place a sell limit, and you need to place it strategically so that the market will tap your sell limit. Sometimes it can even come and not tap your sell limit. Then, then you find the market all the way down tomorrow as you wake up and your trade was not triggered. That's the danger of these pending orders sometimes.
Oh, okay. Okay. Thank you.
Yes. Yes.
Oh yeah, coach. I have a question.
Yes.
I am it's Steven from DR Congo.
Yes.
I said this. Yeah, at the support, I can close all my position and look for a buy.
Are you in a sell right now?
I am in a sell.
You don't need to close those sells. Remember the main move here is a sell. It's not even the buy.
Yeah, the main move. Yeah, the main move is a sell. Yeah.
Yes. So the cells that you are in, all you need to do, you can even put your stop loss on break even. You can put on break even, or put where we want to put the stop loss of these other entries that we want to enter. We want to enter here. You can even shift your stop loss just above there. It now depends. Now it now depends with how aggressive had you entered. You discover that personally, for example, myself, I can enter aggressive here, right? Then just these few candles all the way to this demand, I'm in good profit to even close. So there's no way I can close this and wait for it to come back. I take again. So that's also another way of taking it, depending on how aggressive you are doing. If ever you went in conservatively, no need for you to close. You simply need to shift your stop loss just above here. I hope you answered.
Okay. Yes, I understand. Yeah.
Yes, wonderful. Anyone else with a question?
Yeah.
Anyone else with a question? Anyone else with a question?
My side.
Yes, sir.
On the same question that asked Steve.
Yes.
As we hold the small account, I think why
Right.
we are
Can I
in a good profit now.
can,
We can close, then we wait while the
are
equity
you in
is
a sell?
going.
Are you in a sell, Mr. Salam?
Yes, yes, yes.
Wonderful. So you know, let me tell you one tactic of a small account. It's something that we're going to talk about obviously deeper in the $1 million class. When you are trading a small account, this is how you trade a small account. A small account, your focus when you're trading a small account must be to make sure that you're closing profits as much as possible.
Yeah.
When you're trading a small account, when you know that the account is small, you need to make sure that you are taking profits as much as possible. I'm not referring to you taking profits anywhere, but especially on the specific zones that you expect any retracement. You need to make sure that when you're trading a small account, you have taken profits so that when the retracement happens, you have taken profit and you can actually enter again after the retracement has happened. That is how you trade a small account, because it's small.
Yes.
You need to take profits, and take profits and take profits.
Understood, understood, coach. Yes, coach.
Wonderful,
Yes, coach.
wonderful. Anyone else with a question? Anyone else with a question? Anyone else with a question based on what we have spoken? Anyone else? Others, are you answered? Others, is it clear?
Clear, Mr. Mike. Clear, very clear.
Wonderful, 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 wonderful. So whatever we are doing here, you can do it on any pair, whether it's VIX, whether it's price trended, boom trended, whether it's gold, whether it's even if it's currency pairs, crypto, whatever, you can. It's the same thing. This is how institutions they operate. This is how markets move. This is how price is moved. Once you understand how price, that's why I tell you, you don't need to focus. You don't need to trade 10 instruments, 5 pairs. No, one instrument, you can actually focus on one pair and you can actually make more money than someone who is trading 5 pairs. One pair that you can actually apply all your energy and all your focus on one pair and you make more money than someone who is busy trying to trade so many pairs at once. Because the most important thing is mastery. Once you have mastered, is for you to master the art. That's the most important thing, especially now in the beginning stages. The most important thing is mastering the art. Mastering the art. Once you have mastered the art, you can now do anything. You can now do anything. Once you have mastered the art, you can now do anything. So, guys, I think we are done for the day. We're done for the day. Those that are in the class, we are going to have a very serious webinar. You will see it late tonight or early tomorrow morning. It's a webinar that is so crucial because we're going to cover a very important subject concerning the stages of one's trading journey. There are 4 stages when it comes to one's trading journey. I'm just going to quickly just tell you about, just to summarize a little bit. There are 4 stages when it comes to your trading journey. Once you understand these 4 stages, you actually start to grow to the level that you're not at. So the fourth stage, this is where the majority of the people they are at, those ones that are losing. Let's say, I don't know, is it 90% or it's, let's say 90%, they are here on level 4. Then here on 3, here we have, here I can say top 1% here. Here I can say 7, 8, 9, 7%. Here 2%. Right. So this is the ratio. On level 4 is what we call the unconscious incompetent stage. Unconscious incompetent stage, level 3, it's what we call conscious incompetent stage. Level 2, it's unconscious competent stage. Level 1, it's what we call conscious competent stage. Once you're in level 1, once you're in level 2, level 2 and level 1, that's where you start to experience real money out of the market. That's where you start to realize consistent profitability in these 2 levels here. That's where you start to realize money, consistent money out of the markets. When you're still down here, you still have a long way to go. You still have a lot of work to put in. Unconscious incompetence, this is a stage whereby you're losing, but you don't know how and why you're losing. Conscious incompetence, you are losing, and you are also now aware of what is making you to lose. But you don't really know how to correct that, right? And you're also gaining awareness bit by bit of how to start being competent. Then there's level 2. Level 2, now you are winning. Level 2, you are winning, but you're not aware of what is really making you to win. You can win, but if we really ask you to really explain how did you really win, you can't really explain that much. You can't really explain that much how you won the trade. Then level 1, you are aware. You're aware, you know why the trade won. Even if a trade doesn't go your way, you know even why it didn't go your way. So level 1, it's all about winning. You know how your trades are winning. You know what is making you to win. You know, if ever I enter the Boom 500 sale, I know why it won. I know why I won that trade. I know the reasons why. I can actually state them. That is level 1. So I'm going to share much about that in the webinar, in the mentorship class. So see you there, and make sure that you watch the webinar in the class.
Thank you, Mr. Michael.
Wonderful, 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 wonderful.
Thank you, King.
Yes, you're welcome, sir.
Thank you.
You're welcome, you're welcome, you're welcome.
Thank you, coach. Thank you, coach.
See you in the class. See you in the class.
Okay. Good night. Good night.
Wonderful.